Okay, hey, welcome, guys. It is Tuesday night, July 22nd, in preparation for the markets on Wednesday, July 23rd. Before we jump into the daily stuff here and some other things, wanted to pick back up with the Jack Schwager book, Market Wizards, Interview with Top Traders. Um, we are finishing up with Tom Baldwin. Let's see. You've done tens of thousands of trades, says Swagger. Does any single trade stand out as particularly emotional? The first 100 lot I did, it was a milestone. What kind of a jump was that for you? Asked Swagger. Well, you tend to go from one lot to five lots to 10 lots to 20 lots to 50 lots. Swagger says, so you probably went from 50 to 100. Do you remember that trade? He said, yes. Tom Baldwin said, yes. It was a much bigger trade. The market was trading at 64 and a quarter, and a broker bid 25 for 100 lots. Um, but he did not put a size on it. He just bid 25. So I said, sold. He thought I was being funny and said, I'll buy the 100, knowing that I had never traded that big before. So I said, well, I'll sell you 100. The market went to 24, offered instantly. Swagger says, it almost sounds like you did your first 100 lot as a dare. Well, almost, he says, Baldwin, but I wasn't a very good trader then, and I immediately bought 10, then 10 more. I was trying to bid at 23, and the market went to 22 offer. By the time I got out, I had 10 different people in the trade because I didn't know how to cover the 100 lot. Excuse me. Swagger said, but the trade worked out for you. Oh, yes. Well, actually, the word got out that this small trader had done a 100 lot, so I had to go up to the office to talk to the clearing firm after the close. Swagger says, how long had you been trading at that time? Oh, about 6 months. Well, that was pretty early on. I assume that your capitalization was really inadequate to handle 100 lots. Tom Baldwin says, right. I had probably made maybe 100,000, maybe not even that. Swagger says, well, even at 100,000, that wouldn't cover you for much of the move. Yes, only about 1 point. And then in parentheses it says in the bonds, 1 point equals 32 ticks, which is the smallest price movement. Um, Baldwin said, I told them, look, I just thought it was a great trade at the time, and I'll probably never do it again. Swagger says, how long was it before you traded 100 lots again? Tom says, about 2 days. Um, are you always in control, or are there days when you have lost control? Tom says, there were days when I have lost control. Are there any that stands out? Asks Swagger. There were a couple. You have to say that about any day that you lose a couple of $1 million, though. Um, do you ever use any trading systems for anything? No, they wouldn't be there if they weren't wrong. Do you think trading systems are a losing game? Says Swagger. Sure. Why do they even exist? Swagger says, will you tell me? Tom says, because people are not confident in their own abilities. If you had a really good trading system, you could make millions. Why would you sell it for $29.95? Swagger says, does luck have anything to do with trading? Trading is like any other job. You work hard, you put in the time and effort, and you make your own luck. I was lucky for the first 100 lot I sold was a winner. But why was I lucky? Because I stood there all day for over 6 months developing and honing a market feeling. When the opportunity occurred, I did not hesitate. You have to pay your dues to get the luck, says Schweiger. Right, says Baldwin. Uh, sorry. Okay. Oh, sorry, Jacob was texting there. Um, I'll back to the book. Is there a part of success? Is part of the success a willingness to not always do your own thing? He was talking about watching other people in the pit. He said, right, you have to adapt to your success. If you make a lot of money, all of a sudden you start to think that you are infallible. You forget the reason you were right was because of all those little factors that you followed. As soon as you think, well, I'm the guy who's going to lead the way, then you get slammed. Swagger says, So it really doesn't make a difference whether it is your idea or somebody else's. Winning or losing is all that counts. Where the idea came from is not important. Right. Do you have to be somewhat of an egomaniac to be a good trader? Asked Swagger. Tom says, actually, the best traders have no ego. To be a great trader, you have to have a big enough ego only in the sense that you have the confidence in yourself. You cannot let ego get in the way of a trade that is a loser. You have to swallow your pride and get out of it. Swagger says, after you get way ahead, is there a temptation to say, well, the extra money doesn't mean anything anymore. Maybe I should just cash in the chips. Um, Tom says, I never thought that way. Obviously, when I started, I needed to make money to support my family, but I never had a goal to make $1 million. I said, hey, this is great. Maybe I can just make 100,000. Swagger says, yeah, but you passed that a very long time ago. Do you have any other goals? No. You just do what you do because you enjoy it? Asked Swagger. Yes, and I hope it lasts, says Tom. So this is the prologue here. Baldwin's incredible trading achievements made him an ideal interview candidate for this book. However, I did not really expect his comments to be pertinent to myself or others off the floor traders. After all, what could a floor trader, whose time horizon is measured in minutes and seconds, say that was relevant to traders who hold positions for weeks or even months? To my surprise, the interview yielded some relevant insights. Perhaps the most important point made by Baldwin was his emphasis on not viewing trading in terms of money. To him, money is only a means of keeping score. By contrast, most traders tend to think of gains and losses in terms of their monetary implications, a frame of mind that only gets in the way of making trading decisions. For example, assume you originally planned to risk up to $5,000 on a trade, and you quickly find yourself down by $2,000. If at this point you start thinking of the trade in terms of money, for example, well, the extra 3,000 can pay for my vacation, then you might as well liquidate the position, even though you still believe in the trade. It is one thing to get out because you no longer like the position, but it's quite another matter to liquidate it on impulse simply because you have translated the risk into tangible monetary terms. Another interesting point made by Baldwin is an unconventional one. Do not get out of a losing trade too hastily. Instead, wait and choose your time. This advice seems to fly in the face of most trading advice. After all, isn't one of the basic tenets of trading success to cut your losses quickly? However, I don't think Baldwin's statement contradicts the rule. I believe he is saying that often the worst time to bail out of a position is during a violent price move against you. Baldwin's point is that by bearing the pain, pardon me, tickle my nose. Baldwin's point is that by bearing the pain just a little longer, you may be able to find a more favorable circumstance for liquidating. Of course, this philosophy should be applied only by disciplined traders, those with the ability to maintain a risk control strategy. All right, the next chapter is Tony Saliba, One Lot Triumphs. Readers unfamiliar with options may wish to read first Appendix 2 in order to understand related references in this chapter. So I guess he does options. But anyway, we'll jump into that later. All right, back to the markets here. Wanted to say, okay, so today was a short sell. Obviously, it looks like we went down and made those lows first. And that would, by nature, on the George Douglas Taylor book, classify tomorrow as a buy day. So just want to keep that in mind. So according to Taylor's trading methods, it would be a buy day tomorrow. However, I wanted to point out some things here that I have some back and forth. I know Dustin always hates it when I do this, but so on the daily, the LBR slow line and fast line is still diverging. So we still got some divergence in the slow and fast lines here from, this wave threes, and then we'll be kind of going sideways here and made one more little poke higher. So we are getting that divergence there in the daily. But wanted to show this in the overall picture. This is the LBR overall picture. Our slow line has maintained positive through this whole move up. We've had this wave one, 5 SMA buy, wave 2, 5 SMA buy, wave 3, 5 SMA buy, and then we moved on up here into wave 4. We had another 5 SMA buy, and now we're now we kind of went sideways, a little bit of breakout to the upside here, and we're toggling around this 4 and 5 period SMA. Have not come back down here and touched this 20 period moving average since this last wave 3. So wave 3 we broke out. Wave 4 we did not come back down, and the 20 period moving average is this middle line here. This is the mid Keltner, and I currently have that sitting at 62.67 and a quarter. So 62.67 and a quarter, which is the bottom of this, basically the bottom of this channel here, this bracketing here. So we've not touched that 20 period moving area in quite a while. We were pretty well extended. Like I said, 4 waves up in here. There could be the 5th wave. So I don't want to discount that or throw that out. All right. All right. So 65,000 tick chart. Wanted to pull this over here. All right. So on the 65,000 tick chart, you see we've kind of have this high, these highs here, these lows, test. So this creates an actual box here. So we had a little bit of range here, popped out of it, a little further consolidation here. Now we've popped out of that to the upside there. So we want to, let me pull this down here so you guys can see this a little better. All right. We did go back in and, there we go. Okay. So we have these low developed areas, from overnight here. I said we kind of shot up, then we shot down. This was on Friday the 21st, or no, Monday the 21st. We shot up. Today we shot down on the 21st. Oh no, that was in the afternoon. So shot up in the morning, shot down in the afternoon. Overnight action. Then this morning we pushed down here pretty aggressively, only to come back up in here. And look, ironically, where we stopped, we kind of stopped filling in some of this low developed area here. So we'll see what happens from there. The slow LBR. Oh, I'm sorry, guys. That's the 60-minute. I wanted the 65,000. Well, kind of shows similar stuff there. Sorry, let me get the 65,000 up here. Okay. So yeah, this is the 65,000 tick chart that we have here, and you can see I had this low developed area here, and then this low developed pushed back down here. I guess that one kind of actually came down in here. So it's a really low developed from this 35 all the way up into where we started breaking down up here in 65. Well, we've come pushed up here overnight in the Asia opening. However, what I'm seeing here is on this slow line, we're negative on this push back up here. So we're filling in this low developed area. It's technically not a divergence because we have not taken out these highs up here. Recall we had this quarter point failure up here. And now this moved back up. So I have no idea what this is on the let's see what we are on our move here. Okay, so we're above 61.8 in the Asia session. So we kind of, bumped up against that quite a bit here, and then pop up here into the Asia session. So we'll monitor that, see if we move back down below that 61.8, or if we have continuation and come back up and take out these quarter point highs. All right, see if we make lower highs. Okay, so back over to the 60-minute. On the 60-minute, what I'm watching for here is to see if we move back below this 20 period moving average. That's kind of the around the 63.47, 63.50 zone. This picture is a little bit different here on the LBR 310. You see it's starting to come up a little bit. However, you do have a little bit of this going on, but again, you don't have true divergence because you're not at a new high yet. So that 65,000 tick chart, we still have that slow line going down. whereas on the 60-minute chart, it is moving up a little bit there. Um, Again, I want to watch that 20 period moving average, see if we move back below that. Um, Oh, okay. Yeah, yeah. I just made a note to myself that hey, we're pretty far extended. Not to say that we couldn't have a fifth wave, but keep in mind that we are on that big fourth wave up of the five SMA buys. The next thing I wanted to look at here just real quick was the internals. We've been kind of watching and monitoring this point here for a little bit, which is that 1648 zone here uh, on the VIX, and that's just a 3 point move down from the spike high here, move back down here. So again, I'm kind of watching this LBR down here. We're kind of jostling back and forth here a little bit. Not a lot of anything significant going on. Just a lot of price or over. This would be equivalent to price overlap here. Spike up, spike down. So I'm just going to wander to the 1648 and just more so watch the directional move tomorrow. All right, that's it. Don't want to belabor this point. We will talk again tomorrow, guys. Happy trading, safe trading, and let's all try and call out our trades. Every one of us, myself included.